Hey, what's going on YouTube? Kenny here, and today I want to talk to you about the Tattoo Chef. So the Tattoo Chef is basically a private label, plant-based company, synonymous to like companies like Beyond Meat and Impossible Foods, but they have a broader portfolio of offerings at this point, I would say. And again, they did start what I'm calling a brand transformation. So this thing has been all over YouTube, and so I don't suspect anybody's going to click on this because there's about 1,600 other folks ahead of me on top of this search. So no dang way. But I'm doing this for the fans. So if I don't get at least 25 clicks, if I don't get 25 views, I'm going to be very disappointed, fans. Nah, I don't care. I'm just doing it for y'all. It don't matter. This was a pretty interesting look. So let's go ahead and take a look at the Tattooed Chef. Hopefully we can get this done in one take because I would hate to edit this. It's going to be probably pretty long, though. All right, so the Tattoo Chef, what is it? This is what they're saying they are, corporate profile. Tattoo Chef is a leading plant-based food company offering a broad portfolio of innovative plant food products that taste great and are sustainably sourced. Okay, so you say, that's interesting. Okay, so the next thing I want to go over is, let's go over tip rank. So basically right now they're looking at definitely outperforming. You see 10 out of 10. Bloggers are very bullish. Hedge funds have come in a little bit. We'll talk about that later. Definitely positive technicals. That's obviously based on the 20-day moving average and the 200-day moving average with a momentum of 127% in the last 12 months. Ridiculous. Yeah, and again, we have very positive sentiment from the tip ranks investors themselves, and I think this is the biggest cohort when it comes to moving the money right now or the stock price. New sentiment is very low, and we'll go ahead and talk about that too, kind of some just initial thoughts on that. So with that said, let's go ahead and take a look at how much analyst coverage there is. As you can see, there's not very much, so we're very new in this kind of cycle, is like what I call it, and you'll see that from this here. If you can see it right here, institutional ownership is only 7%, but the thing is, insider ownership is 61%. So even if institution wanted a controlling stake, they couldn't get it at this point, right? So with 61%, you know that the people who run this company really believe in the company, and that's actually very apparent by the insiders selling. So buying. I'm sorry. Yeah, in fact, even after they went public, obviously they would have a lot of shares already, but they're still buying up shares. 11 transactions in December, so they see something. They definitely see some growth here. So that's the first one, and obviously you can see all these buys. This president and CEO buying, directors buying, CEO buying. They believe in themselves. Let's just say that. They want their shares back. So, that's a very, very positive sign. That's absolutely what you want to see, especially, coming in from October, and then as it rises in price. Obviously, yeah, no, it's just a really good sign. I did look through the 10K a little bit. A lot of it had to do with the pre-SPAC kind of complications. So I won't really go over that, and I don't think it's that necessary for initial cursory review. I know a lot of times I do go through the 10K and the 10Q, but I think for the most part, a lot of this has been solved, and so we can get a lot of that from the new quarterly and also the investor pitch deck. All right, so what else? So basically, the latest and greatest when it comes to the news was this investor day, or analyst day, that happened on December 15th of 2020. I bring this up. I'm not going to read through this, but I bring this up because there hasn't been much news, and that's kind of like the biggest fault line for me when it comes to this stock. As you can see, that's like, obviously, they've only had October, November, December, but even with that, like December, we've gotten very little coverage. And that means a lot to me as a trader / not trader, but like even an investor / trader, because I am very sentiment driven. If you've watched how I trade or kind of look at stocks, it's a big factor. It's a big multiple in how I grade stocks. But I think there's a lot to be said about all the other pieces of this company. I think it's quite interesting, though. So that's just to say that there's sentiment. The sentiment or the news cycle has not caught up. So this might be actually a good thing, because when it does catch up, I think the price kind of takes off and gets evaluated where it should be. So that's kind of a clue to what I think about this company. So again, Analyst Day on December 15th. And if you go to Google search, so in red is the tattooed chef, right? So any consumers trying to figure out what the hell it is, nobody cares. This is a stock driven sentiment, right? Look at the volume from the stock. So in the blue is TTCF, and in the yellow is TTCF stock. They're pretty synonymous. I'm not going to say that I'm going to draw any distinctions between the two search volumes. I only did it just so I can see if the tailing off or the tapering off was indeed true. But what I'll say is, Investor Day was about right here. So leading up to Investor Day and post Investor Day, there was definitely sentiment, especially look at the baseline right here, which is the tattoo chef, right? Like somebody just randomly, casually searching for it. So my point here is there's volumes of sentiment. So this stock is definitely what I would consider sensitive to sentiment, which is for traders a very good thing. For long-term investors, you probably hate the volatility, but you do like to see interest because volume precedes price typically. So just a few thoughts there. All right, so what came out of Investor Day? So this is the actual pitch deck out of Investor Day. You see this? I'm not going to go through everything because there's just so much here, and it's a really well put together investor pitch deck. I try to poke holes and red team a lot of this stuff, but the way it's put together, they're very professional, and they definitely have taken a look and carefully curating what they're presenting to the analysts. So that's a very good thing. A lot of attention to detail was put into this pitch deck, but I'll just notice that this is a parabolic move here, especially for this 2020. And of course, I think this is a very good sign. So what else? The interesting thing about this, so this slice of the pie, so if you're thinking, hey, what about Beyond Meat and Impossible Foods? I don't know fully what they are fully working on. I know they have sausage products and stuff, Beyond Meat, etc. But if you're thinking it's just a meat alternative, then you would probably be wrong because look, they're working on desserts, and obviously seafood and other. But I mean, if you just take the meat category alone, then yeah, you might say that this is a very blood red competitive zone, and I don't know that they can get there. But I mean, they're clearly aware of this other part of the wheel, and they are trying to capture it and attempting to capture it. And you can see that in their website. I mean, there's a ton of interesting stuff that they're working on, and obviously they have, to the core chef, right? And that's why they call it that. And generally, you probably want to look at it and say to yourself, like, does this brand look good? Does it fit what you think could create like a cult of personality? And I could see it happening for sure. So that's promising. What else? So highlights of the investor pitch deck further is just, revenue growth. Look at this CAGR, crazy. And then now they have a $90 million cash balance. And so that, they have money to do what they need to do and to scale and to think about things. And you'll see during the interview that I kind of pop up here, that's one of his initial concerns, but then he realized, that, hey, I maybe should take it back. But I'll let him speak for himself. Just a little financial performance. You can see here, look at this, like sick, right? Enough said there. And yeah, this is just to show that, like, quarterly, we're definitely doing pretty well here. Not sure what happened here, but I mean, looks like this number is still increasing. Okay. Next. Okay, so this is the actual CEO right here, Sam Galletti. And, for me, it's really important for me to take a look and at least listen to the CEO because with companies like this, small companies that are starting to get moving, I think there's a lot of challenges that you need a really strong CEO for. I mean, there's boring companies in there, like, for instance, one of the companies I was researching previously, Leggett & Platt. I don't care how solid the CEO is. He probably just needs to have his screws in place and just have the right relationships and make sure the production versus the production capacity is looking good and, manage those kind of things. But this industry in this emerging market, you want a guy that's really thinking through things. And I think he definitely checks the box. Again, I'll let him speak for himself. But actually, in fact, let's go to that right now. So the first piece here is him kind of talking about how he kind of got into this. And so he's a family-oriented, driven person, and it's a really interesting story. But basically, the takeaway I want you to take away from this is he's really opportunity driven. Like, a lot of these things happened because he was in the right place at the right time, and he didn't squander the opportunity. He saw it and he said, "Oh, okay, let's try that. Okay, let's do this." So without further ado, let's kind of listen to him.
And sure enough, man, we hit that thing 2017 with these plant-based concepts and with this brand and this look, and in club it just took off. In Sam's and Costco's, it just took off. And it was just, we've been on a full court press, and so what happened is that then at the beginning of 2020, I said, people started saying to me, "Sam, do you know how much your company could be worth?" I go, "I have no idea. It's always just been a family business. I just, want to, have a good life and have my family involved with my business." And so I said, "Well, let me just see what's out there." So, I put my toe in the water, and we got some valuations for the company, and I couldn't believe it, what people were valuing us for. So amongst all of these offers, there was this SPAC opportunity. And it was like, I never in a million years would have said I want to be a publicly traded company. It's never, I don't even play stocks. I don't even do it. So, I've always said to myself, I'm going to invest in myself, because that's what I want to do. So among all of these offers and these opportunities, there was this SPAC situation. And then I started understanding it. And I was like, okay, I could get so much, and I could still control the company and have these shares and be in charge of my company every day, like I've been for the last 35 years, run my own company, have my family involved, and have all of this additional money to now really go out and see what I could do, have no financial limitations, but just go for it. I was like, wow, what an incredible opportunity. And so that's really how we got here today.
Yeah, and again, that's kind of why all that insider buying. Like, I assume that he had money on the sideline, and he was just like, "No, this is definitely going to work," and so he rebought shares as he had money coming in. So, I mean, that's very promising. He definitely believes in himself. I watched this whole interview. It's about an hour and a half, so definitely a good watch. It's on MVC Investing if you want to watch the whole thing. But one other quick note, this is just talking about his relationship with his partners just watch it.
Some of them for many years. So I'm not sure how much in detail you want to go into as it relates to Costco and Sam's Club and some of these others, but can you tell us at all just about what the relationship is like, how long-term, some of these partnerships have been, et cetera?
Sure. So, my background is really private label. So, for this whole branded thing, as you know, they're really different worlds. And, that is, to me, been the most interesting situation that's been happening, because it's not like, I know these buyers or knew these buyers when we first went into Tattooed Chef with our plant-based concepts. I mean, we really just went there and said, here we are, here's what the brand looks like in 2017. These are our products. And from the moment that these guys saw us, it's been really, really amazing. So, to me, the question is, well, somebody says, well, how much is the brand that's driving this craze, and how much are the products that is this innovation that you guys bring that's driving this momentum? And I have to tell you that at Club, it's more important to have the innovation of the products. Costco doesn't care what the brand is. Costco wants products that sell, that resonate with their people, that really connect. And then it's a benefit if the brand is also so accepted and so incredibly, successful. So in my opinion, what happened was it was just like all of this thing just hit at the same time. We had these plant-based food, products with this brand that people just automatically go to. But it's the products that really create the opportunity with club. I can't sit there and say that, that I have any kind of a long-term relationship with a club buyer, because it doesn't exist. You have.
So yeah, what I'm getting at here is basically his whole argument here is like just so pragmatic. There's so much pragmatism there. He's just like, no, he understands that there's this layer of sentiment with just moving towards plant-based foods, and that he's a provider of it. And because of his innovations and the products are so good, it doesn't matter what the brand is. I mean, they look at it and they say, okay, over time, I think the brand recognition will start hitting, right? But at this point, he's just suggesting that it doesn't really matter, and he's still saying that not only is he in there, but he's producing, and he's getting the sales, which is all he cares about. Not all he cares about, but he's definitely thinking about this the right way. So I really like his train of thought. I'm very agreeable, amenable to what he's saying and how he's espousing the positioning of his company. So really liking this guy. This is one of the very few CEOs that I've seen recently in some of these run-up stocks that I've been pretty impressed with. So pretty good, pretty freaking good. What else? So if you look at the DCF model here, this is just a revenue exit one for 5 year. I couldn't find, like the other models that I try to implant on this didn't really work out so well, but this one is calling for a fair value of $34, which has a 41.8% upside, and I think that makes sense, and I'm going to tell you why that makes sense. I got some napkin math here. So if you take this chart here, clearly this is, so now the way that I'm doing this is because there's so much kind of inconsistency, and I'm really not sure how to weight the capital in terms of this industry. So I'm going to just look at it relative terms. So if I'm comparing to Beyond Meat, and I know there's not exactly the same, but I mean they're definitely competitors. If you look at just revenue, so the top line, if you're looking at that relative to the ratio, you're looking at about a 3 to 1, 2.96 to 1 ratio. But then if you take a look at the price that it's trading at, so market cap, right, is 8.5 billion against 1.6 billion is what they're captured. But if you compare that comparative to revenue, that's 5.2x, so 1 to 5.2 against the other ratio. So if you do the math on that, there's a 56% upside. And you ask, Kenny, what does a 56% upside look from here? 56% from this price today is about $37. And so if we go back to the DCF model, we're looking at fair value of $34. If you look at Tip Rank Analyst, they're saying $22, but that's only because there's only 2 analysts and they haven't upgraded anything yet. So you cannot take any of this. Third point, if you look at FinViz, again, who's trading this? Insiders are trading. They're buying their own stock, one, so they believe in themselves. But institutions don't own this. It's all retail money. So because there's so little institutional ownership, 7%, things like YouTube here, look at this, guys. This actually will affect it. And I'm not saying that these folks, one way or the other, start to drive the needle, but there's definitely probably a little correlation. So there's definitely that. What else? Just in finality, if you take a look at this, I definitely, when I was looking at this chart pattern before, my first buy was here. I was looking at when I first saw it, I mean, it really looked like a cup and handle, and it was coming back down, and I thought this was going to be the push. I did get out some of my shares at 21 because I wasn't fully researched yet, and I'm still not. I mean, this is definitely a cursory view, and I'll give you my opinion, but I don't have enough information to make a solid, like, long-range 5-year investment target, but I definitely think this price target of $34 is sound. I did get in here, and I got another buy here. Bouncing off the 100. But I think actually from here, I'm going to call this position full until I do more research. And this is not a recommendation to buy or anything. In fact, I'm not a financial advisor. And there you go. Okay, so one other thing. If you go here, we'll just go talk scoring. And I haven't done enough. Again, this is just a very initial cursory review. So this score will change as I take a look at it. But I mean, it's hard to discount how strong this company is right now, and a lot of folks are calling for 100% returns on the value of the stock at this point. So, I mean, 40 is the price target for most of the YouTubers, from what I've seen. But network effects, I didn't actually quantitatively map this, so I'm just going to go ahead and hold on it. But I'm just going to call it green just because of their positioning with Sam's Club and Costco and all that stuff. I have to actually take out my code book and map it out, but haven't visualized it. I'm just guessing. But I've been doing this for a while, so. Sentiment wise, yeah, I mean, I think there's really good sentiment and there's a little bit of confluence. I don't see any cult-like behavior yet. In fact, if there's any cult-like behavior, it's from Beyond Meat. But I think their CEO can actually make that happen. He's got to get out there and get it. But I don't know that he cares enough to. But I mean, Tattoo Chef seems like a cool looking brand. I think it can get there, but right now I think it's like a little bit below average. And plus, we need to get more cults of YouTube to get there. I mean, we have some of the right folks talking about it, so that's good. Fundamentally, I mean, it's good. Convergence, yeah. I mean, like if you look at just the layer, so the layer that is the plant-based products that's just emerging right now, it's, in terms of product market fit, I think it's the right time. It's not too early. I think Beyond Meat was probably a little bit too early. It took a lot of volatility for these guys. These guys are like drafting behind all the volatility. So I think that's a good thing. So that's green. And definitely the technicals are green. I definitely see, from here, I definitely see this kind of panning out. And I don't know what this looks like, but I really think it might be a rather smooth ride up here. If this is a cup and handle indeed, we might hit this pretty quickly, January 15th-ish. But if not, if it doesn't do this, I don't feel like there's going to be a sideways movement here. Absolutely could be wrong, but I mean, the way that this stock is playing, the kind of synergies that are being expressed through the stock price, I have no idea, but I mean, this trend is lining up very nicely. So, I mean, even if you just go for this trend line here and say we haven't broken it yet, you get there about January 21st if it rides this trend line up there. And I think we might, I think we can get a pullback in mid-February. That would make sense. And then you could get another buy-in down over here, 24 again. Okay, so that's what I think of that. And then in terms of just the investor cycle, yeah, I think we're pretty ideal right now, honestly. I think you have room for growth and you can definitely get there. If you haven't seen this chart, this is not the tech adaptation chart. I've definitely turned into my investor cycle chart. But I think, in terms of how much, this is just showing you how much money I think is behind us. I think all these folks are behind us to buy. We're probably a little early. If we can get a couple hedge funds or some institutional money in there, we'll get over here real fast, and then that's when you want to look at selling. Again, my price target over here is $34. And then finally, what am I doing? Well, I have a 1-year time horizon, and I'll keep looking at the leap calls to see if they're any good. But right now I'm just taking unleveraged raw positions, and then again, my position's full at this point for me because I'm only taking 2, and the risk that I'm hedging again. You're saying, Kenny, this looks so strong. You have all this green, and clearly the fundamentals are good and everything. Why aren't you taking a full position? Well, the risk that I see is that Beyond Meat, and I don't know what their network looks like, so I have to go back and evaluate all that too. But Beyond Meat and Possible Foods, and like a lot of the institutional money is saying that all the easy money has already been made in this space. And so anybody else coming in here has to be very good. And so I'm not saying that Tattoo Chef is not good or whatever, but I'm saying that I can, with a reasonable amount of certainty, think that it will reach that $34 price target. But I don't know past that. And so for me, I think this is a investment grade / tradable. I probably should actually put it into tradable, but my time horizon's probably a little less than a year, but I give it a year to play out to 34. I think we get there way faster than that, like almost in like under 6 months, but I'll give it a year. So really, that's it from me, and I think I got this done in one take, so I'm pretty stoked. So, all right. As you can see, I do kind of requests. So I have a position in this, but I wasn't going to do the due diligence because it was just pretty much a trade. I really think the first quarter it already plays out to $34 price point, but I could be wrong. So I think it's a rather safe play, and there's a convergence coming on. So I just think it's good. Let me know if I'm missing something. The awesome thing about this is I love hearing what y'all have to say. There's a bunch of smarter folks than me. And if you're watching this video and you see something that I don't see, let me know, because I love to hear from you. I love chatting it up and trying to figure out where I'm not seeing the right thing. So really appreciate your time. And if you did like this video, thank you so much for watching, and tell YouTube that it's good. All right. See you tomorrow. Bye.